I want to add another voice into this conversation right now. Joining us is Betsey Stevenson, professor at the University of Michigan's Ford School of Public Policy. She's also a member of President Obama's Council of Economic Advisors. Good morning to you. We're talking about these productivity numbers. You look fondly or positively at where we are right now?
I think that this has been a remarkable economy. I mean, every month we look at job growth, and it's just been delivering a really unprecedented pace of job growth for 11 years into a recovery. It's just stunning. But at the same time, I do think that there are certainly some concerns about the economy, things that we need to be worried about. And the trade deal is definitely, the trade issues is definitely one of the concerns that we face. And so is the slowdown that we see in other countries. The UK just announced this morning that they had no growth at all over the last 3 months. When we start to see, some of our big trading partners see their growth slow, that's a worrisome sign for us.
Didn't we have a similar story close to a year ago for a little bit? And there was these fears were in the market, and then they weren't.
Yeah, I mean, I think that what we're seeing is people have some nervousness. There is a chance that things go south, but right now things look pretty strong. And I think the question is, what's the Fed looking for? The Fed's going to be looking at what's happening to other countries.
I'm sorry to interrupt. There's a Dow Jones headline that the tariffs could be pushed back, and we've now seen the futures go from, we were at 140. Recently I saw 80. Now they're in green. They're up 9 points or so, now 12. I mean, we are ticking higher with each tick on the Dow based on U.S. and China trade negotiators planning for a delay of tariffs. It's at least in the Wall Street Journal. I don't know if this is exclusive, but U.S. and Chinese trade negotiations are laying the groundwork for a delay of fresh round of tariffs set to kick in on December 15th, according to officials on both sides. They continue to haggle over how to get Beijing to commit to some big U.S. farm product purchases. You laugh at me, Sorkin, I know that. But you remember the research that I was doing earlier today. My research was that
you looked at a calendar.
I looked at a calendar. 10th. I said it was December 10th.
And
I said that December 15th,
yes,
we're getting
close.
Answer?
Was 5 days away? Did you come up with that?
I said we're 5 days away. And
that was the research.
And you have a master's degree in microbiology?
No, interdisciplinary science, but with a focus on that. But anyway, but my point was, time's a wasting, and the market's pretending it's going to be delayed. When are we going to hear whether it is? And it looks like it has been.
I think we should thank. I want to get to Kayla on this news.
Quick question. Betsey, you are a labor economist. We're debating the 266,000 jobs that happened announced on Friday. Where are the workers coming from? Quick charts. I don't know if you can see them. The women have come back to work, 25 to 54. If you look at it, the men have not. Is there endless supply?
That's the story. Yeah, an endless supply of women? No, we don't have an endless supply of women. But we do see that, women are continuing to come into the labor force. Look, the household survey didn't show as strong a growth as the employment survey does. That happens because, there's the month-to-month vagaries. But I think what we've seen in every recession over the last 20 years is women's labor force participation grows coming out of it, and men's doesn't really. And that's a long-term story of, women are going to college more. They're responding to market incentives more than men are. And I don't think anybody has a really good answer of why men are so dulled when it comes to responding to market incentives. They're not going to college at the right rates. They're not coming into the labor force, even when the economy's really strong. But women are doing the kinds of things economists always thought people would do: work more when wages go up, go to college more when the college wage premium rises. This is the same story we've been seeing for 2 decades.
Romney had a binder full. He had a binder full of women. There was many. Betsey, I don't know if you remember, but he had plenty. You said
there is. I think the problem is employers are working through their binders, and they are going to eventually run out.
If you look at the numbers, Joe, when we ask the question, where are the workers coming from? It is women, and if you put up that chart of men again, we are not back to participation rate. I think, Betsey, the incentives are wrong. Maybe they needed a couch with unlimited beer or something like that. And I don't know what it is. I know I'm in danger of making bad jokes here, but
yeah, you got to be careful. But
incentives may be wrong. But also there are issues out there. The late Alan Kruger came up with this idea of whether or not it was an opioid issue. But I bring this up because it's a very critical issue for the market. I know it's hard to talk about demographics in terms of the market, but if you want to know if strong job growth is going to continue, you have to figure out if there's workers.
You got to figure out where the workers are going to come from. I think the thing that's going to have to happen is wages are going to have to go up. We're going to hit a wall at some point where workers aren't going to continue to come unless they see stronger wage growth. I think economists have been thinking we were going to hit that wall any day now for basically about the past 2 years.
Yeah.
So I'm not going to predict that we're hitting the wall next month, but there is one. I will tell you that. There's one. We will at some point run out of workers if we don't start raising wages more sharply.